Now, Egypt has raised its investment target for this year to about 53 billion US dollars. By any account, that's an enormous amount of money. But in light of the insurgency that's currently running in the Sinai Peninsula, and of course the fact that some of those attacks are now creeping closer and closer to Egyptian urban centers, is that target really viable? We'll be live in Cairo in just a moment, asking that very question and plenty more. Welcome to Global Business Africa. Here's what's coming up. The Chinese mobile phone maker Huawei has its sights set on taking down Apple and Samsung. And we'll show you how an ATM is changing how water is bought in some of the slums in Nairobi. Let's start, however, up in Egypt. The country has set a total investment target, as I mentioned earlier, for the current fiscal year at nearly $54 billion. That's up from about $46 billion expected at the end of the last fiscal year. Now, private investments for the current fiscal year are expected to be about $30.6 billion. Public investments forecasted at $23.3 billion. Now, about 30% of that will be government investments in infrastructure, roads, housing, and so on and so forth. The remainder will be investments from public companies. As ambitious as these targets are, however, they may be slowed down by an insurgency that's raging in the Sinai Peninsula. At least 17 soldiers were among those killed after militants launched near-simultaneous raids on military checkpoints in Sheikh Zayed and Rafah. On Thursday, the EGX-30 fell slightly, bringing the cumulative slide over the last month to over 6%. Let's head over to Cairo now. Yasser Hakim is live with more data to put all this story into perspective. Yasser, let's assume for the sake of argument I'm an alien, I've landed in Cairo, I have no idea what's going on. I just know there's an insurgency going on in northern Sinai. Walk us through what's going on here. Who are these insurgents? What is their objective?
Well, if you want it in a nutshell, you've got two types. You've got the extremists who have been infiltrating throughout the last 3 years due to the security vacuum after 2 uprisings in 3 years. So you've got chaos on the streets and the borders are open. You've got neighbors like Libya, like Sudan, like Iraq and Syria, where there's a lot of extremists there and militants. They're moving in, trying to take more ground in another, what they think can be their safe haven. And they moved in hoping to what they call establish an Islamic State. They have been cordoned off into northern Sinai. Most of them are in this area. It's a desert area close to the borders, not less than 800, 900 kilometers from Cairo and the main cities, so it's kind of deserted as well. But it's not easy to control because it's all deserts, it's all hills. It's a very big area. And more of a guerrilla war that would make it hard for an army to take over. You have on the other side the Muslim Brotherhood, the outlawed Muslim Brotherhood, who had a president in power a couple of years ago. And last year, just like today, 2 years ago, sorry, he was ousted. Now his followers, his supporters are now also working on trying to destabilize the country and hoping that they can reinstate him into power. So you've got those two parties playing at the same time. Coordinating or not, they're saying they're not, but there are marks by the government claims that they are coordinating together, they're working together, and that the evidence is that all these escalation of violence is happening on the anniversary of the ouster of the Brotherhood leader Mohammed Morsi, and you've seen the escalation in northern Sinai. So it's all a mess, if you can say, but the army is trying to keep it intact, at least away from the major cities.
Indeed. Let's actually focus on that. Earlier this week on Monday, the public prosecutor was assassinated. There have been concerns that this insurgency may actually now spread into the major urban centers, Alexandria, Cairo, and so on and so forth. Are those concerns that investors share?
Obviously, there are concerns. It has not been felt strongly in the market, especially that most of the investors right now who are going with the largest amount of funds are the Arabs and the Gulf states who are aware of the complicated situation in the region. They're aware of the in-and-outs in Egypt. They know when to go in, when to go out, and how to deal with the current atmosphere here. So Arab investors who have the largest amount are still working fine. China as well, with its investments has announced that it will not change its policies. And you've got the European Union, the US, saying that they are backing Egypt in its war on terror. It's a bit too soon also to get any feedback on whether any cancellations of any contracts or maybe delay in contracts to be seen. So at this point, there's no big major change felt in the market.
Indeed. Foreign investors, of course, have been net buyers of stocks, even as the EGX30 has plummeted over the last month. What's the attraction there? What's the value proposition that's drawing them in?
It's just the same point that Egypt, as a country, as an economy, is a strong potential. There is a lot of potential in the country. We've seen in even previous situations during the last 3 years when we expected that investors would go out, that the market would plummet. It wouldn't, and it would hold strong. What the Egyptian mentality in the stock market, they sell and buy with a little more fear, not as strong, not as long-term as the foreign investors. They go into the stock market long-term. They know that if they buy now, it will go up in a week or so, and they can cash in. And also because of this, the type of buying and selling this week was 88% were institutions, not individuals. So 88% of the market shares went to the institutions buying and selling, not individuals. And those, especially the foreign ones, always look at the long term rather than the short term gains.
Indeed, we'll leave it there for the time being. Thank you for your inputs. That's Yasser Hakim live in Cairo. Now, on to the other side of the continent. There are plans to roll out electronic trading at the Zimbabwean Stock Exchange. They were supposed to start on the 3rd of July. They also dramatically flopped on the same day due to a technical hitch. The main index over there has fallen by about 11% in the first half of the year. As Farai Makutua reports, the move to automated trading was supposed to attract more investors to this depressed market by making it easier and more efficient to trade.
The local boss has been talking about automation for more than 2 decades, and it looked like the dream was about to be realized.
We're going live tomorrow on the 3rd of July. Our first trades will happen from about 9 o'clock. That means all our traders will be trading from their offices.
But technical hitches encountered overnight have sent the dream up in smoke, for now at least. The exchange says it aborted the launch as a precautionary measure. Its statement reads, "Erring on the side of caution, it was decided to address a technical issue to ensure seamless completion of the settlement process." Automated trading was the one bit of good news that was hoped to breathe life back into a depressed market. The ZSE has seen $1 billion in value wiped out in the first half of the year as trading retreated by 32% compared to the same period last year.
The trades are not there, so our brokers are suffering because the trades are not there. But what we're trying to do is to build a platform to have volume. So the ATS will provide us with a platform to have volume.
With 63 counters, the US dollar-denominated exchange has attracted the interest of foreign investors who dominated trade. Electronic trading will make the ZSE accessible to those international investors, speed up transaction times, and hopefully increase value. The plans are still in the pipeline, but no new launch date has been set as yet. Farai Makutua, CCTV, Harare, Zimbabwe.
Elsewhere, a war of words is currently brewing in Nigeria between the new government of President Muhammadu Buhari and the country's former finance minister, Ngozi Okonjo-Iweala, and it's all about money from the excess crude account. Jaji Badmus has more.
I just want to say
at the heart of the seeming war of words between her and the current government is a sum of $2.1 billion spent from the excess crude account, an account where the government saves surplus from crude oil sales. The highest economic decision-making body in Nigeria, known as the National Economic Council, is alleging that the former finance minister's office withdrew $2.1 billion from the account without appropriate authorization.
drawings are made unilaterally without consulting those that actually own the money, because the excess escrow account is 52% owned by the federal government and 48% owned by the states, and that's how, and local government.
Okonjo-Iweala has hit back at the council, accusing some of its members as simply engaged in a political witch hunt. In a statement issued by her media aide, the former minister denied making any unauthorized expenditure from the excess crude account. Part of the statement reads, quote, "Decisions on such expenditure were discussed at meetings of the Federation Accounts Allocation Committee, FAC, attended by finance commissioners from the 36 states. How can some governors who fought federal government's efforts to leave robust savings in the ECA and even took the federal government to court over the matter turn around to make such unfounded allegations?" End of quote. She said she was ready and willing to answer any summons about issues under her purview as finance minister. It then remains to be seen if the panel of 4 set up to probe the running of the ECA would invite her for questioning. Analysts say that is not unlikely.
Well, absolutely. Anybody that serves the public or had ever served the public has a responsibility to account for what he or she has done. So to that extent, everybody involved in the process, including, of course, the former finance minister, have a duty to explain what happened under their watch.
And it's not just the excess crude account that has come under the spotlight. The Nigerian National Petroleum Corporation, too, is to be investigated over alleged non-remittance to the Federation account.
The entire Federation, that is the federal government and all the state government and all the 774 local governments, the amount the NNPC paid to the Federation account for distribution to these 3 tiers of government came to 4.3. And NNPC, a trillion naira, and NNPC alone took and spent 3.5 trillion naira. Now, which means NNPC, the cost of running NNPC is even much more than the cost of running the federal government.
Out of $67 billion NNPC shipped.
It's actually not the first time issues will be raised over the finances of the NNPC. Former Central Bank Governor Lamido Sanusi got fired by former President Goodluck Jonathan early last year after he alleged that the NNPC had failed to remit $20 billion into the Federation account. President Buhari had last week warned that he was going to probe how his predecessor Goodluck Jonathan ran government finances. He now appears to be walking the talk. He has also pledged to recover billions of dollars allegedly stolen by past government officials in about 3 months. Deji Badmo, CCTV, Lagos, Nigeria.
We're still in Nigeria, this time about utilities, however. The conglomerate Transcorp says it plans to invest $1.5 billion to raise its generation capacity to 2.5 gigawatts over the next 3 years. The company expects to expand through acquisitions this year, and that should help it fulfill its target to generate at least a quarter of Nigeria's installed capacity of anywhere between 6,000 to 7,000 megawatts by 2018. Transcorp said it was on track to boost its power generation capacity by 859 megawatts by the end of 2015 from the current figure of 610. The conglomerate also has interests in hotels, oil and gas, and it said it expected the contribution of its power business to group revenues to rise to 60 to 65% this year from 25% last year. Right, then a quick run through the markets here for you. Fairly dismal set of numbers right across the board. Of interest, however, is Kenya. The trend of outflows that we've seen, essentially foreign investors yanking the market from East Africa, is still very much in progress. In the second quarter alone, $26 million flew right out the window. That effectively brings the outflow for the last 6 months to over $600 million. Coming up next, we'll be looking at Huawei's bid to take out Apple and Samsung right at the top end of the market. We'll also be in the Republic of Congo. It aims to link its southeastern mining region with the capital, but a lot of infrastructure is needed to do that. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global business. weekdays at this time on CCTV Africa. Welcome back. Now, over the next year, Kenya's energy sector regulators working on a bunch of regulations that will effectively allow households to generate their own electricity from solar panels to sell any surplus to the country's distribution and transmission company, KPLC. When I spoke earlier on to Joseph Nganga, the ERC Director General, he stressed the importance of both off-grid power and connections to regional power grids in order to meet the growing demand for power in Kenya.
The key thing we'll be addressing is to see how anybody can be able, for instance, to generate solar and be able to bank with the off-taker. As long as you are connected to Kenya Power, you can be able to have solar panels on your house, and during the daytime when maybe you don't require the power, generate and sell.
What would you need to do as ERC in order to enable me, if I build a house and I put solar panels up and I want to sell that power to KPLC, because let's face it, I'm not in my house for most of the day, what would need to be done?
It's an issue that is coming up, and it's already done in some of the Western world countries. And we've been having a challenge here because Kenyans are very informed and they have raised those kind of issues. Why don't we have that in place? And we have prepared regulations. Indeed, we consulted with a German consultant who has already produced some procedures, because the key thing is processes. Because you cannot be able to, for instance, sell one and expect that you get the same amount of refund from the off-taker, because they have, of course, invested in the distribution investments. So we're looking at a situation where probably you can be able to sell one unit and be refunded maybe 60% of that.
Can you give us any timelines on that? When should we expect regulations or anything of that sort?
Hopefully within the next, this physical year, we should be able actually to be able to have an agreement on how we can be able to move forward.
Gibe 3 has been in development for quite a while, but it also run into a lot of criticism for the ecological cost that it has on the Omo River and Lake Turkana. Those concerns that the regulator shares?
Yes, we do. For every project, especially power, there are huge investments, and you'd want to ensure that there are adequate consultation. And the issue of the environment, when you take our case, for instance, is very critical. Indeed, for any approval that we have to do for a power purchase agreement, like in this instance between Kenya Power and EPCO of Ethiopia then, we require the environmental management license. So we won't really be able to move without seeing the approval by the relevant environmental body to be able to clear that. And that, in the case of Gibe, must have been done, as far as we know. And therefore, with that, the key thing we'll be looking at is the feasibility of ensuring that we can access that, because we are concerned about the cost of power in the country. And the issue here, when you look, is that, again, there is an inevitable development where you'll be opening up to a bigger market, the East African market. And therefore, we'll be looking at accessing what would be the cheapest.
How much is the power? How much are we buying Ethiopian electricity at?
The initial one will be about 400 megawatts, but there's provision to go up to 2,000 megawatts.
And the price per kilowatt hour?
It will be very competitive in the region of 7 cents.
One final question for you is, these grids get connected. Kenya to Ethiopia, we're already linked into Uganda. Tanzania, I understand, is building a line between them and Zambia, which would essentially connect the East African and the Southern African power pools. Doesn't that change your job as a regulator to think not just in terms of how do I set up a PPA between a generator here for the Kenyan market, but to set up a PPA between this generator for the East African market?
We already ahead on that, because we work very closely with the East African power pool. And what is happening is that there's an agreement to have an independent regulatory body that will be able to oversee over and above the national regulatory bodies. So it's actually referred to as the Independent Regulatory Board, IRB. And we've been having meetings with them. And the key thing here is to be able to have an agreement on a wheeling arrangement, because this power will be, for instance, transversing from Ethiopia down to Tanzania, and for us maybe from South Africa up. And each country has to be able to allow that, the access, and then we have to agree on a wheeling charge that will be applied by the countries.
Bigger certainly is better. Let's head off to the Republic of Congo. It's building a new road that should link its southeastern mining region with the capital of Brazzaville. As currently designed, that road should cost the country about $66 million. It's expected to boost trade volumes, which have often been limited by inadequate transport infrastructure. Now, the Pool area in the southeast of the country suffered quite a bit during a bloody civil war that ran between 1998 and 2003. Rebel forces, known colloquially as the Ninjas, conducted insurgent activities in the area between Pool and the capital. Until now, residents have had to rely on fairly irregular rail transport in order to get around. The groundbreaking ceremony was carried out by the Republic of Congo's President, Denis Sassou Nguesso. It was greeted with quite a bit of jubilation by the locals.
We have no clients for our products because of isolation. Once the road is constructed, we will be able to export what we have harvested to Brazzaville.
There are merchants that will be able to go to and from Brazzaville and Minduli. It's an important point. In case of an emergency, if there is no train, one can travel by car and get there faster. When the road is tarmacked, a lot of things will change, and that would mean there is more development.
With this road, there will be a dynamic to the profit of the population.
Now, Huawei has launched its new P8 smartphone in South Africa, and it's got Apple and Samsung right in its crosshairs. Already, this Chinese handset maker is the second biggest producer on the continent, at least by market share, but most of its handsets have been on the lower end of the market as far as price is concerned. Over 1,200 guests and tech journalists were invited to its African launch in Johannesburg last night to get a feel for what Huawei say is their best device yet. Travis Andrews was there.
In one of the most hotly anticipated events on this year's tech calendar, Chinese mobile phone giant Huawei unveiled its new premium mobile smartphone, the P8.
And that's a launch in South Africa.
It's packed with hordes of new features and some world firsts as well, like an all-new 13-megapixel 4-color image sensor, as well as a new selfie setting that is able to beautify its owners at the touch of a button.
2 brilliant colors.
Huawei's devices team went back to the drawing board on the P8 to incorporate growing new trends as well as its consumers' ever-evolving needs.
There was a lot of consumer insight that we took to ensure that we met the demands of what people want. Things like usability was particularly important, so the user interface is absolutely phenomenal. I think it's our best yet. From a design perspective, we've done exceptionally well to ensure that the device is easy to hold, it feels good, it feels natural in the palm of your hands, so that really does address what the consumers want.
With a room full of tech journalists from across the continent, the pressure was on the Huawei devices team to impress with the smartphone's new features, and they didn't disappoint.
It's got a couple of features that look interesting. One of them is that it's able to do the light painting with the camera. People love being able to play with the camera. It's one of the most used features on a phone, and particularly smartphones. But in the end, all the features come to nothing if people can't afford your phone. So the price becomes almost the most important feature. Second to that, how they've just announced tonight that they're going to be launching what Samsung called an accidental handling from damage warranty. This is an even bigger feature, because what this lets you do is if you drop your phone in water or its screen smashes, they will fix that for free.
Mobile phone penetration is growing throughout Africa. Here in South Africa, the latest statistics show that by 2019, around 25 million people will be accessing the internet through their smartphones. It's this growth that firms like Huawei have identified as major boons warranting investment.
In the past few years, Huawei market share in the east of South Africa is growing quickly. Every year is double. Right now, roughly speaking, and in last year, our market share is close to 14% a year. So if you look at the future there, South Africa and the East Africa market is one of the most important market for us globally. So we'd like to invest more.
The device is set to retail around the $650 price mark across Africa. And at around half the price of other premier smartphones, it could be one to watch out for in the future. The new P8 smartphone will be released in the next 2 weeks in Huawei's key markets in Africa. Now, it does come in at a very attractive price point, which could prove very enticing for consumers and spell bad news for its competitors. Travis Andrews, CCTV, Johannesburg.
Right then, a quick run through commodity prices. We often tend to forget that at $60 or so a barrel, crude price is actually about 15% higher than where they were about at the start of the year, the end of January. They were bottoming out at around 50 or so. However, what is of interest to us tonight is Nigeria. For how much longer can it maintain that peg at just under 200 naira to the American dollar? Right then, when we come back, we'll be looking at how tech is transforming access to clean water in Kenyan slums.
First runner-up is Philippines, the 1999 Miss Universe.
Pule is one of the pioneers of what we now call beauty and brains.
Beauty does not use me, I use it. It's a gift that I think as a believer God gave me to use.
Everybody wanted to touch her, everybody wanted to talk to her, everybody wanted photographs with her. It was just amazing.
She knows what works for her, but I think she would be a great political leader. I want to see her president of Botswana one day.
Welcome back. Tech is helping to deliver a cheap, reliable, but most importantly, an affordable supply of clean water to the residents of Nairobi slums. Authorities have installed 2 ATMs in the Mathare slum, which effectively allow residents to buy fresh water and pay for it with a smart card. As Uche Koronko reports on Grassroots tonight, this has had a big impact on household lifestyles and expenditure.
Gone are the days when Pauline Wanza would have to walk 4 kilometers twice a day to get water from unscrupulous vendors. Thanks to technology, she and other Mathare slum residents can get access to clean water whenever they want it. This is one of the 2 ATMs dispensing water to the residents of Nairobi's Mathare slum, home to around 50,000 people. The machine works exactly like a cash ATM. Residents are given a smart card preloaded with funds and simply choose how much water they want. A 20-litre jerry can of water costs half a Kenya shilling.
Before this water machine, we had problems. We used to walk far to get water. We did not even trust the water. It was dirty, so we had to boil it before drinking.
This water ATM is a partnership between the Nairobi City Water and Sewage Company and a private company called Groundfus. Both companies say the water source is always safe and clean and that residents can drink it straight from the tap.
We would have kept going to the hospital because of the polluted water, but since the water machine was installed, we are happy. In the past, when the water disappeared in this area, we'd have to go far looking for it, and I used to get tired. But now I can go fetch and carry the water myself.
Residents of the area are being given smart cards for 50 Kenya shillings or about 50 US cents, which gives them access to 2,000 litres of water. The smart card has a unique code which is used to identify each card holder. So far, they've registered about 400 people.
What do we intend to attain? One is to make sure that the people in the informal settlement get water in a dignified manner. No, not really getting it in a sanitized way. The water that is being dispensed by the machine here, we are sure of its quality. We are assuring them that they're going to get quality water from the machine.
According to a United Nations Habitat study carried out in 2013, more than half of the urban population in Africa lives in a slum. Yet a vast majority do not have access to clean, affordable water. There are plans to expand the water ATM scheme to other locations. But for Mathare residents, these ATMs mean no longer having to worry about sourcing hygienic water for themselves and their families. Uche Koronko, CCTV.
And that's where we leave it at this edition of Global Business Africa. As always, thank you very much for your time and your company. We'll see you right here on Monday. Goodbye.